What's up, guys? It's Cash Flow Cart. How many stocks in your dividend portfolio? We've all probably thought about this at one point or another, but today I'm going to be offering, my perspective on things. And I think it's kind of maybe a little bit contrarian outlook as we see, so much ETF investing. Me personally, I like to select individual dividend paying stocks. I like to search for undervaluation and then build out a position. So, I see this comment today and he said, really stuck on which ones to sell, and then I guess he lists his whole portfolio. Now, I don't know, what the dollar value of this portfolio is. That wasn't included. But if I had to guess, this guy is, probably a little earlier on in the dividend investing game. And I think it's inevitable that a lot of dividend investors are going to run into a point where they're like, I have so many positions at this point. Yes, they all pay dividends. I can't really keep up with, the performance of each specific one. So I'm feeling a little overwhelmed. I'm feeling like I've spread myself too thin. And then, you might have this feeling that you need to, I guess, get leaner in the sense of slimming down the number of positions in your portfolio. And yeah, I'm going to talk about how I kind of deal with this. And that's focusing on, one or two, maybe three if I'm already kind of averaging into positions I have, but one or two opportunities at a time. Okay. And what I mean by that, I think it'll be easier here if I show an example. So, if you guys have watched my portfolio reveal, you probably know that Microsoft is one of the positions in my dividend portfolio. And, after doing my due diligence and, wanting this one to be in my portfolio for the long term, realizing they have a wide economic moat, increasing free cash flow, a lot of cash on hand to sustain their dividend and hopefully, hopefully increase it in years to come. I start building this position out. All right. But you'll see, like, I bought one share of Microsoft in 2019. Okay. So this was not like, I want Microsoft, here's my position. Okay. I was paying attention to valuation. I'm looking for dips. I guess there are a few sells here, which isn't ideal. And then I see, I guess, a sizable correction back to this 200-week moving average. I double down my position, and now I'm personally not as interested in the current valuation of Microsoft, but I have that one in my portfolio. Hopefully that wasn't too many words to kind of explain that this game, it's going to take you a while to build out positions, but that's good, okay? Because that's going to kind of create, a sense of selectivity that you're not going to get. Obviously, you guys have probably watched a lot of dividend investing videos. You might see some YouTubers, sharing their portfolio, and it's like, sharing their portfolio, and it's like, I made 10 cents from this, from my 1.5 shares. That's not really me, because if you're going to be that diverse in all these small positions, at that point, why not just use an ETF? Why are you into this dividend investing game if you don't have, that real conviction in your positions? You don't really want to outperform. And, when I say outperform, I guess it's important to note the benchmark. I would like to outperform the S&P 500, but more specifically, I'd like to outperform SCHD, because that, a lot of times dividend investors, I feel like, throw around SCHD as the benchmark. So if I'm going to do this, picking individual stocks, building out positions, I want to be able to outperform, an ETF that kind of operates a little more mechanically, I guess, with, no real discretion. Hopefully that wasn't long-winded. But again, I really want you guys, if you're starting out, to avoid this place where you're like spread so thin, you don't even really know which positions you should be adding to, which ones are doing great fundamentally, or again, this is not just a game of buying every stock that pays a dividend. If that's kind of your plan, I would take a step back, save your cash, or just work with, a low expense ETF for the time being. All right, moving on. Okay. I talked about this in, what is today? When is this video going to come out? I guess I talked about this in Monday's video, but as you're building your positions, as you're moving along in this game, and this is a long-term game, there's going to be rumors, there's going to be chatter like anything. And, during the height of the pandemic, 2020 and 2021, we saw like a retail trading frenzy. Okay. GameStop, AMC, AMD, there was a ton of tickers going absolutely nuts is the bottom line. I'm not going to pull up like specific charts, but there was definitely some sense of like, value investing is dead. Guys, that stuff is all noise. Okay. Companies that generate free cash flow and can afford to pay a sustainable dividend, that these companies with wide economic moats are not ever dead. So again, there's going to be a lot of different sentiment around different types of investing. If you want to do this game, take it seriously and be in it for the long run. You're going to have to learn, I guess, to block out some of this noise, okay? Because it's definitely going to be there if you're going to succeed in this. Moving on. Okay, the Magnificent Seven. This is some other stuff, you might get a little sense of FOMO, okay? But when I look at this, I realize, let's back up a step. The Magnificent Seven, that's, the 7 largest stocks in the S&P 500. And then they compared it to the S&P 493. So the 493 other guys, and then the biggest 7, again, this is kind of a cherry picked example because, why is it 7? I don't know. When I was younger, it used to be FANG, and then FANG, like 2 A's in FANG. I'm going to let you know, guys. Again, the temptations are going to be everywhere to move your money around, to abandon this strategy. But, don't let some sort of short time frame, cherry picked type of graph kind of deter you from this. Honestly, me looking at this, my biggest takeaway is, okay, I own Apple and Microsoft in my portfolio. Awesome. I'm not actively buying them anymore because I have seen that share price appreciation. But when I see these other, large cap stocks are basically flat in, year to date, I realize there's opportunities. There's opportunities in this market. I just have to find them. I have to find those quality companies. I have to pay the right valuation, and I have to have the conviction to kind of, build out a meaningful position.